morning, traders. Welcome to the TMT Stock Market Strategy video for Tuesday, October 4th. All right, well, we don't have much today on the calendar, but we do have one of the Fed governors speaking this morning at 8 o'clock. We have the big non-farm payroll numbers that are due out the first week of every Friday, and that's going to be closely watched as elections near for November 8th here in the United States. Yesterday, we had a little bit of movement to the downside, and that was clearly taken away from buyers of dips that continue to come in. And I just keep reading a lot of these sentiment numbers. We have extreme bullish sentiment, guys, meaning that the boat is one-sided. You have to be very, very careful. We are overbought. We're fully valued here in the marketplace, and the market is up only because of the Federal Reserve pumping money into the market into the system since 2009. Not doom and gloom. I'm not looking for a crash or whatever the case may be. I'm just calling out normal, unbiased technical analysis for what I'm seeing. We also coming into a good time of year where the markets are usually like to pull back, which is October. Doesn't have to happen. We are in an election cycle, so yes, it could be avoided with a lot of the manipulation going on here in the marketplace. But eventually, that's going to give way, and that's why I wouldn't put any money to work here as of yet. I'd like to see the markets pull back, even 3, 4, 5 days, 6, 7, 8, 9, 10%. Move lower and then reevaluate and see if was that just a pullback or are we going into correction mode. We're far from it. There's a lot of support below, but I just would not like to see anybody start adding to any long positions here at the top. Does it mean it can't go to 2200 in the S&P cash? Absolutely it can. It could go to 2300. But remember, downside movement is much faster and quicker than markets that move up. Everything can be taken away within a few days. So just want you guys to be aware of that. There's lots and lots of problems in Europe. Banks in Europe, we have Deutsche Bank here in trouble. They may even be insolvent as we speak. Credit Suisse, Commerzbank in Germany. You also have the Italian banks having problems. Greece is not out of the woods as of yet. The Brexit now is back into play. So just there's a lot of bad stuff out there, and we're extremely bullish, and the markets seem to not to care, at least for the moment. So just want to give you guys a good heads up. Let's get right into the technical analysis, and you can see here we are in neutral territory in our McClellan oscillator. You can see here 0, so right up in this area here. We haven't gone really anywhere other than a few blips lower here and here. Back up in here in this area. So just use a little caution. This is a reliable measure of overbought, oversold in the marketplace. And here's the other complacency: is the VIX. Now everybody thinks that the VIX is sell the VIX, sell the VIX, which is great. But when the day comes when the market does explode higher, the VIX I read and I looked into the commitment of trader reports right now is heavily one-sided. Speculative traders, meaning the dumb money, quote unquote, is extremely short. I believe it's the most short since this instrument has been created. So what happens is when volatility starts to explode, all of these short sellers are going to have to cover at one point, and this thing is going to go through the roof. I don't know when. It is also a deteriorating asset, meaning that when there's lack of volatility, this thing just collapses. So you have to be careful, use caution. I wouldn't look to get long it right now, but any sign of some weakness and we're starting to get a good selling pressure with volume, then you might want to take a look at this. And even buying volatility right now, if you wanted to buy protection in your account, is very, very cheap at the VIX down at these areas. You might want to look to that too, and just in case. Next is the dollar, because I want to cover some commodities. I want to cover gold, and I want to cover some crude oil. You have a beautiful, well-defined symmetrical triangle here in the U.S. dollar. And as we all know, dollar up, crude oil, gold, precious metals, grains down. Okay, that's just how it works. You have to be careful here. It could go either way. It looks like to me it wants to take out the 96 area here, and that's a 200-day moving average. If, in fact, it does take it out and can hold above it. Now, last time it didn't do so here, and I remember it didn't do so here back in late July. But if it can hold above it and take out this local swing high here at 97.5, then I think you're going to have some big selling pressure on gold and even crude oil, despite that OPEC is willing to reduce production up to 700,000 barrels a day. You remember, guys, OPEC doesn't have the juice it had many, many years ago. And there's a lot of nations that need to continue to produce oil, as well as the United States. We produce a ton of oil here in the United States, as well as our shale oil producers. They're not stopping; they're continually moving higher. So crude oil to me. Um, and now let me get you that picture. You could see here crude oil. I mentioned this inverted head and shoulders with the symmetrical triangle. We did break out on the OPEC news. Now we're approaching a big area, which is 50. 50, 55, I don't see crude oil well priced in to move, if at all, that much higher. If anything, you want to take a look and see. If you want to look to buy the crude oil here, I would like to look for a pullback into the 45, 46 area. Let it back test this symmetrical triangle and then see if it has momentum to break out. And if it does break out, then you're probably looking at a 55 print. Okay. Here's the UWTI, which is the triple ETF to trade oil, which is something that I like to trade here. Instead of USO, which is very small now, it's like $9, $10. This is something a little bit better. It gives you a little bit more movement in crude oil itself. So this is something here. The bull flag I mentioned here last week, we did break out. We're outside of that Bollinger Band now, but look at the volume. Volume has diminished on the way up, so just use a little bit of caution here. I'm looking for a pullback in crude down to around, let's say 21, 22, and then look for further price action to at least challenge these local swing high here in UWTI. Let's take a look at gold here. Gold right now, I had mentioned to you guys, I'm looking for gold to go lower, not higher. This is when we had that little pop up here. And if I were to draw this trend line here, you could see that we're touching the trend line here. So this trend line is valid. I'll make a connection with this tomorrow. But you could see 1300 here is going to be big area of support. If we lose 1300, we should flush right down to the 1260-ish area. That'll give you that 38% retracement. 1255, 1260. And then this is where I'm looking for crude oil to stabilize and look for a backing and filling, and then look for a takeout of that area, which I would start looking to get long gold. Here's the GLD. There's that double top that we talked about. You've seen many times, along with a descending triangle. We had a doji at the lower end of the range here, but you can see that the MACD and RSI are deteriorating pretty quickly. So a break below this trend line support here will flush back down to the 50, if not the 61.8% retracement at 121.50. All right. Ultimately, I like to see it get down to around 120, even into this supply and demand area here, and then we can start looking to nibble into the gold trade. GDX, you can see the symmetrical triangle, well-defined symmetrical triangle here, and this here is also looking to break down, and this will break down harder than gold will, because just it's that much more speculative. And you can see that RSI and MACD again making lower lows and lower highs. I'm looking for a flush back into at least $24, and if it does break 24, 1920ish area, I will start looking to pick up GDX, and that's the gold miners ETF. All right, let's go into the indices now. Spiders, you could see here. To me, this is to me a bear flag. I'm still looking at, if not challenging the highs or the lows here. I'd like to see us take out this low here. If we take out 212, we're going to flush down to the 210 area, and that's going to be the first objective target. You guys all know that. Follow me. 210 is going to be my target from this move lower, and then we would reevaluate it, which would coincide nicely with the 200-day moving average in the spiders. And you could just see here 60-minute, we're starting to break down here. We're holding true here, but you could see lower lows and lower highs in MACD and RSI. 212.50 right up in this area here is going to be the big area that needs to be taken out. If we take out that area, then we're going to flush down to 210. Okay, and that's a spider 60-minute chart. Here's the transport's doing quite well. We still need to take out this little area here, this swing, this resistance area of 146.50, the IYT ETF. If we take that out, that will probably help the bullish case, by the way, for stocks. Russell 2000, you could see here, Doji Day. We've actually had an inside day for the last 6 trading days. So really not much movement in the Russell 2000. Either it's holding in here for a further breakdown, but you could see it's holding our proprietary price channel here, the TMT price channel. And by the way, the TMT trading model is still in fact on a sell signal. Just there is no movement. If we continue to get dojis for the next few days, we might get into a neutral reading, but I'll keep you guys informed. And of course, Here is the Qs. Keep an eye on a lot of these big cap tech, but right now we're pausing here. So either we're going to break out higher or break lower. We're still above the TMT proprietary price channel, which is bullish. So let's just take it one day at a time. I think we're going to get some movement. A lot of headline coming out of Europe, and keep an eye on the Qs, especially the VIX, guys. Watch that VIX. If the VIX starts to really get well bid up, you can see people starting to look to buy protection going into Friday's non-farm payroll. Have a great day, everybody. We'll see you tomorrow.